If you were born before 1966, the next few minutes could save you hundreds or even thousands of dollars this year. Many retirees assume they're already receiving every benefit they're entitled to, but that's not always the case. In fact, every month, millions of older Americans miss out on valuable retirement benefits simply because they don't know they qualify, they haven't updated their information, or they didn't realize a simple deadline was approaching. The good news? Several important retirement-related benefits can still be reviewed or claimed before the end of the month. Some involve your Social Security payments, others could reduce your Medicare costs, lower your taxes, or help you keep more of your retirement income. The key is knowing what to check before another month passes. In today's video, we're walking through 7 retirement benefits every American born before 1966 should review right now. We'll explain who may qualify, what each benefit does, and the simple steps you can take to make sure you're not leaving money on the table. Even if you're already retired and receiving Social Security or Medicare, at least one of these benefits could still apply to your situation. Make sure you stay until the end, because the final benefit is one that many eligible retirees overlook, and checking it could make a meaningful difference to your monthly retirement budget. Let's get started. Let's begin with something that sounds simple but could have a real impact on your retirement income: reviewing your Social Security earnings record. Many people assume that once they retire and start receiving benefits, everything has already been calculated correctly. But mistakes can happen, and if your earnings history contains missing or incorrect information, it could affect the amount of your monthly Social Security benefit. Since your retirement benefit is generally based on your highest 35 years of earnings that were subject to Social Security taxes, every year of accurate earnings matters. Even a single year of missing wages or incorrectly reported income could potentially reduce the benefit you're entitled to receive. That's why it's a good idea to review your earnings record from time to time, especially if you notice something that doesn't look right or if you had several employers throughout your career. The easiest way to do this is by signing in to your secure My Social Security account and comparing the earnings shown with your own records, such as old W-2 forms, tax returns, or pay stubs if you still have them. If you discover an error, don't ignore it. The Social Security Administration allows you to report discrepancies, and you may be asked to provide documentation that supports your claim. Correcting an earnings record can take time, so the sooner you identify a problem, the better. Even if you've already claimed retirement benefits, it's still worth checking because corrections may affect your benefit calculation if an error is found. The good news is that many people log in, review their earnings history, and find everything is accurate. That peace of mind alone makes the few minutes worthwhile, and if you do find a mistake, fixing it now could help ensure you're receiving every dollar you've earned over a lifetime of work. Spending a little time reviewing your record today could prevent a costly oversight from affecting your retirement income for years to come. Another important benefit to review before the end of the month involves your Medicare premiums. Many retirees are surprised to learn that the amount they pay for Medicare Part B and Part D isn't always permanent. If you're paying higher premiums because of an income-related monthly adjustment amount, commonly called IRMAA, it's worth checking whether you still need to pay that higher amount. Medicare generally determines these premium adjustments using income information from a prior tax year, which means your current financial situation may be very different from the one being used to calculate your costs. This is especially important if you've recently retired or experienced another qualifying life-changing event that significantly reduced your income. For example, if you stopped working, lost income because your spouse retired, experienced the death of a spouse, went through a divorce or marriage, or had another qualifying event recognized by the Social Security Administration, you may be able to request a new determination of your IRMAA. If approved, your Medicare premiums could be adjusted based on your lower current income rather than the higher income reported from an earlier tax year. Many retirees continue paying higher premiums simply because they don't realize this review process exists. They assume the amount deducted from their Social Security check is fixed, when in reality, there may be an opportunity to have those premiums lowered if they qualify. Requesting a review typically involves completing the appropriate Social Security form and providing documentation that supports your qualifying life-changing event and reduced income. Even if you're not sure whether you qualify, taking a few minutes to review your current Medicare premium notice and compare it with your present financial situation can be worthwhile. A successful appeal won't increase your Social Security benefit directly, but it could reduce the amount deducted from your monthly payment, allowing you to keep more of your retirement income. Before the month ends, it's worth confirming whether your current Medicare premiums still reflect your financial reality, because a simple review today could lead to meaningful savings over the months ahead. The third benefit to review is whether you're receiving every Social Security benefit you're actually eligible for. Many retirees assume that once they begin collecting retirement benefits, there are no other options to explore. However, Social Security has several types of benefits, and eligibility depends on your work history, family situation, and other personal circumstances. While not everyone will qualify for additional benefits, it's worth taking a closer look to make sure you're not overlooking something that could increase your retirement income or provide financial support in a different way. For example, some individuals may qualify for benefits based on a current spouse's work record, while others may be eligible because of a former spouse if certain requirements are met. Widows and widowers may also qualify for survivor benefits if their deceased spouse earned enough Social Security credits during their lifetime. In some situations, a survivor benefit may be higher than the retirement benefit the individual is currently receiving. Eligibility rules vary depending on factors such as age, marital history, and when benefits are claimed, so reviewing your options can be worthwhile if your personal circumstances have changed. It's also important to remember that Social Security laws and regulations can change over time. Recent legislative changes have affected benefit rules for some retired public sector workers whose benefits were previously reduced under certain provisions. As a result, some retirees may now qualify for higher monthly payments or receive adjustments that were not available in the past. If you worked for a federal, state, or local government employer during your career, it's especially important to verify whether any changes may affect your benefits. Even if you've been receiving Social Security for years, life events such as marriage, divorce, the loss of a spouse, or changes in your work history could affect your eligibility for certain benefits. Taking a few minutes to review your current benefit information, either through your secure My Social Security account or by contacting the Social Security Administration, can help ensure you're receiving every benefit you're entitled to under current rules. A simple review today could uncover options you didn't realize were available and help you make the most of the retirement benefits you've earned over a lifetime of work. Another important item to review before the end of the month is your required minimum distribution, often called an RMD, if it applies to your retirement accounts. Many retirees have money saved in traditional IRAs, SEP IRAs, simple IRAs, or employer-sponsored retirement plans such as 401ks, and once they reach the age at which RMDs are required under current law, they generally must begin taking minimum withdrawals each year. While the deadline for taking an annual RMD is typically the end of the calendar year, reviewing your plan before the end of each month can help you stay organized, avoid last-minute surprises, and make adjustments if your financial situation changes. One of the biggest mistakes retirees make is assuming their financial institution automatically handles everything. Although many account custodians provide RMD calculations or even automatic withdrawals, the responsibility for ensuring the correct amount is distributed ultimately belongs to the account owner. If you have multiple retirement accounts, inherited retirement accounts, or recently rolled over funds, it's especially important to verify that your withdrawals are being calculated correctly according to current IRS rules. Taking your RMD isn't just about following a rule, it's also an opportunity to review your overall retirement income strategy. Some retirees choose to spread their withdrawals evenly throughout the year, while others prefer monthly or quarterly distributions to better match their living expenses. Reviewing your withdrawal schedule now can help you determine whether your current approach still fits your budget and cash flow needs. It's also wise to consider the tax impact of your distributions. Because withdrawals from many traditional retirement accounts are generally taxable, your RMD could affect your overall taxable income for the year. In some cases, a larger distribution may influence the taxation of your Social Security benefits or even affect your Medicare premiums in future years if your income reaches certain thresholds. While every financial situation is different, reviewing your withdrawal plan before another month passes gives you time to consult a qualified tax professional or financial advisor if changes are needed. Even if you've been taking RMDs for several years, don't assume everything should remain on autopilot. IRS rules can change, account balances fluctuate from year to year, and your own retirement goals may evolve over time. Spending a few minutes reviewing your required minimum distribution strategy today can help you avoid unnecessary mistakes, stay on track with current requirements, and make more informed decisions about your retirement income throughout the year. Another valuable benefit to review before the end of the month is whether you qualify for a Medicare Savings Program or the Extra Help Program for prescription drug costs. Many retirees assume these programs are only available to people with extremely low incomes, but that's not always the case. Eligibility is based on current income and, in some cases, resources, and the limits are updated periodically. Because of these changes, someone who didn't qualify in the past may be eligible now. That's why it's worth taking a few minutes to review your situation rather than assuming the answer is still no. Medicare savings programs are designed to help eligible beneficiaries with certain Medicare costs, such as Part B premiums and, depending on the specific program, deductibles, coinsurance, or copayments. Reducing these out-of-pocket expenses can make a noticeable difference in a retiree's monthly budget, especially for those living on a fixed income. Every dollar saved on healthcare expenses is money that can be used for housing, groceries, transportation, or other everyday needs. The Extra Help Program, also known as the Low-Income Subsidy, helps eligible Medicare beneficiaries reduce the cost of prescription drug coverage. Depending on an individual's circumstances, the program may lower monthly premiums, annual deductibles, and prescription drug copayments. For retirees who take multiple medications throughout the year, these savings can add up and help make essential prescriptions more affordable. If your income has recently changed because you retired, your spouse stopped working, or your household experienced another financial change, it's a good idea to review your eligibility again. Likewise, if you've never applied before because you assumed your income was too high, updated eligibility limits may make it worthwhile to take another look. Many people miss out on assistance simply because they never submit an application. You don't have to guess whether you qualify. Your state's Medicaid office can provide information about Medicare Savings Programs, and the Social Security Administration handles applications for the Extra Help Program. Even if you aren't eligible today, reviewing the requirements helps you understand what assistance is available and whether your circumstances might qualify you in the future. Healthcare costs remain one of the biggest expenses for many retirees, so overlooking programs that could reduce those costs isn't something you want to do. Before the end of the month, take a few moments to review your income, compare it with the current eligibility guidelines, and determine whether these programs could help lower your Medicare and prescription drug expenses. It could be one of the simplest ways to keep more of your retirement income where it belongs, in your own pocket. Another important item to review before the end of the month is the amount of tax being withheld from your retirement income. Many retirees assume the withholding setup when they first began receiving Social Security, a pension, or distributions from a retirement account will always be appropriate. However, your financial situation can change over time, and withholding that once made sense may no longer match your current tax liability. If too little tax is being withheld, you could face an unexpected tax bill or even estimated tax obligations when you file your federal income tax return. On the other hand, if too much is being withheld, you're essentially giving the government an interest-free loan throughout the year instead of keeping that money available for your monthly expenses. It's a good idea to review withholding on all sources of retirement income, including pensions and withdrawals from traditional retirement accounts. Depending on your circumstances, you may also choose to adjust voluntary federal tax withholding on your Social Security benefits if you're having taxes withheld. A quick review before the month ends can help ensure your withholding better reflects your current income and financial goals. If you've recently retired, started taking retirement distributions, or experienced another significant financial change, this is an especially good time to revisit your tax strategy. Taking a few minutes now could help you avoid surprises later and make managing your retirement budget a little easier throughout the year. The final benefit to check before the end of the month is whether you're taking advantage of every state and local tax relief program available to seniors. While Social Security and Medicare receive most of the attention, many retirees overlook benefits offered by their own state, county, or city. These programs can include property tax exemptions, homestead benefits, tax credits, utility assistance, and other forms of financial relief designed to help older adults manage the rising cost of living. The important thing to remember is that these benefits vary depending on where you live. Some programs are based on age, while others consider income, disability status, veteran status, or home ownership. In many areas, eligible seniors must submit an application or renewal before specific deadlines to continue receiving these savings. Even if you've never qualified before, it's worth checking again because eligibility rules and income limits can change over time. Likewise, if you've recently retired or your household income has decreased, you may now qualify for assistance that wasn't previously available. Taking a few minutes to contact your local tax assessor's office, county government, or state agency could uncover valuable savings that reduce your annual expenses. Since every dollar you don't have to spend is money you get to keep, reviewing these programs before another month passes is a simple step that could make your retirement budget go further. Those are 7 important retirement benefits and money-saving opportunities every American born before 1966 should review before the end of the month. Even if only one of these applies to your situation, taking a few minutes to check could make a meaningful difference to your retirement budget. Remember, staying informed is one of the best ways to protect the benefits you've worked so hard to earn. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and turn on notifications so you never miss future updates on Social Security, Medicare, retirement, taxes, and government benefits. Thanks for watching, and we'll see you in the next video.